The pressing question on investors' minds is how the upcoming US election will affect the current state of affairs when it comes to the global macroeconomic environment and the influence of geopolitics. Things are generally holding steady. However, amid uncertainty regarding the next president of the United States, gold has surged close to its historic peak of $2,800 per ounce, while the US dollar is trading near its 3-month high. On the back of Donald Trump's promises to make the United States the crypto capital of the world, if he wins, Bitcoin has almost reached its all-time high. The leading cryptocurrency tested the level of $73,609, coming close to its record peak of $73,803. Today, the market is busy digesting economic statistics from the euro area and the United States to gauge its stance on the euro-dollar pair. Currently, the outlook for the European currency is not bright. The reports have painted a rather bleak picture of the Eurozone's economy. GDP growth accelerated from 0.6% to 0.9%, while forecasts had anticipated the figure closer to 1%. It's important to note that this is the first estimate, which typically carries the most weight. Meanwhile, Germany's economy expanded by 1%, yet the oral indicator remained at a -0.2%. In addition, annual inflation across all federal states in Germany picked up. Given concerns surrounding the prospects of the European economy, these reports seem relatively positive. Against this background, the euro could gain upside momentum. Furthermore, Germany's economic growth data and regional inflation figures may prompt the European Central Bank to reconsider its plans to cut interest rates by 50 basis points in December. However, the market's focus has quickly shifted to comparable data from the US economy. As a result, the US dollar index, measuring the value of the greenback against a basket of 6 major currencies, has resumed its upward trajectory within an intraday range of 103.90 to 104.40. The US economy continues to outshine the euro area, but it's showing signs of a strain under the weight of the Fed's interest rates. Thus, US GDP growth slowed slightly to 2.8% in the third quarter, below the forecast of 3%. The ADP National Employment Report showed that private sector employment climbed by 233,000 jobs in October after rising by 159,000 in September, well above forecast of 115,000 to 120,000 jobs. While ADP numbers do not always closely align with the official non-farm payrolls report, this impressive surge served as a strong catalyst for the dollar's rally. With the official October NFP release scheduled for Friday, November 1st, it's clear that markets are bracing for high volatility. The euro-dollar pair managed to climb back above the critical 1.0800 level, driven by unexpectedly robust economic figures from the euro area. Despite trading within a descending channel, Wednesday's session saw the euro and dollar navigating an intraday range of 1.0813 to 1.0859 with mixed results. Nevertheless, the euro remains under pressure from dollar buyers and is likely to extend losses, potentially testing the support levels of 1.0805 and 1.0785. In fact, the single European currency has been standing still for most of the week, showing limited momentum. Although the euro had a chance to strengthen against the dollar today, it remained in an oversold territory, and this leaves the door open for a potential rebound later this week. However, much will depend on incoming economic data. For a deeper dive into how economic data affects currency movements, check out our Traders Calendar. The US election next week could have sweeping effects not only on the country itself and its currency, but on the global economy as a whole. For example, Republican victory on November 5th could place additional strain on the China's already fragile economy through potential new tariffs from the United States. And this would likely put downward pressure on oil prices. For now, however, Brent crude is holding steady around $72 per barrel, a level it's likely to trade in the coming week. The focus on the upcoming US presidential election is so intense that markets largely overlooked yesterday's report from the American Petroleum Institute, which showed a drawdown of 0.6 million barrels in oil inventories. It appears that most traders are taking the cues from the media, which currently has few topics as high on its agenda as the US election. As a result, the market remains in a consolidation phase near current levels. Meanwhile, the Russian ruble has maintained its stability. However, the dollar-ruble pair could potentially reach its October high by tomorrow, as tonight's macroeconomic data may further reinforce investors' view that the Bank of Russia's monetary policy is counterproductive. After all, unemployment is expected to rise from a 2.4% to 2.5%, while retail sales growth is anticipated to slow from a 5.1% to 5%. While these numbers are relatively robust, the trend direction itself is a cause for concern rather than optimism. So that's all for today. We keep monitoring the financial market situation. Subscribe to our channel and follow news with us, and see you online soon.